How's it going? How's it going?
All right.
How are we doing, Tom?
Not bad. I think I figured it out.
Yeah, I was just eavesdropping in a bit of your end of your conversation there this morning.
Yeah, I think we figured it out. Well, I think it's the way that I've explained it to myself is the correct way. I just want you to confirm it.
Well, we'll go through. It'll probably be easier if we just go through the PA first.
Yeah.
Because, like, I mean, let's just go through it, and then we'll have a discussion from there. I think it'll be a bit easier, and then sort of, we'll go through the questions. We've got David and Tomas on the call as well, so they'll be here as well to help out with any questions you've got. Just wait till everyone rocks in a little bit more. Give that a few minutes. People seem to get really confused with the time zones for some reason. Even though I said it's in 10 minutes time. So I think it's as clear as possible. But and BST is British summertime, by the way, not British Standard Time, I think someone said. Just as an FYI. Cool. Tomas is late as always.
Must be a Portuguese thing.
Yeah.
Doesn't even have the dinner as an excuse this time.
Yeah. We usually have our calls in the evening, and then he'd like always turn up late, having their Portuguese dinners. But they're not even as bad as like the Spanish. Spanish start way too late for me.
Oh, Italians have theirs at about 9:30.
Italians, do you say?
Yeah.
Really?
Yeah.
I didn't know they did it as well. I guess it's just different climate in the Mediterranean.
Yeah.
Or maybe it stemmed from like the whole siesta thing. Who knows? All right, we've got a few more people coming in. Let's give it another minute or two. I'm just debating whether to just use a completely blank chart or not. Sometimes it's a bit easier to visualize. Let's do this. Okay, cool. I'm going to share my screen. Cool. Hopefully you guys can see that.
Yeah.
I don't know if there's a way to expand. Oh, there we go. I knew how to do that. Once I share my screen, everything goes small, so just trying to figure out how to share or expand the participants so I can see who's in it. Okay, maybe Tomas will jump in. Oh, he's just coming in now. Cool. I'll start breaking down the higher time frames. I mean, I won't spend long extra. I think we should all be pretty comfortable with it, right? We've had that big daily sweep liquidity. We've come into that extreme monthly level, right? So we do know there's a decent possibility. I mean, who knows? We could even potentially come up and target the liquidity sitting above these highs, right? But for now, I'm just viewing it as a potential weekly pullback into these potential levels here. But there is a possibility we really could see something long term here over the course of the rest of the year, or potentially we just come into this supply zone here and the euro will continue to dump. Let's see. Daily chart, not really too much to add other than swing structure wise. You guys know I have my swing high here and my swing low here. So I'm pretty much just expecting, there's a decent chance we can get up to here potentially even switch bullish to have that deeper weekly pullback, who knows. But we are coming into this sort of more decisional supply range here. So, you know, there's the possibility we could form a lower high here, but really the way I'm viewing that is it's probably going to be a bit of a small reaction to come up higher. So, you know, we could see a bit more, let's say, range bound or choppier conditions or complex conditions maybe over the next week or two, whilst we kind of battle our way through the supply that will be within here. You know, I doubt it will continue to be as impulsive as this over the next few days, but let's see. And then 4-hour chart, we obviously switched bullish back on the 23rd of May. And we've kind of just been, making a nice series of higher highs and higher lows since. So let's quickly draw on swing structure. So that for me was a significantly sized pullback, right? So we had another break of structure there. So coming into today, M15 and 4-hour both bullish, and we haven't looked at M15 just yet. And ideally, I was kind of hoping to see, would we come into this 4-hour unmitigated pivot supply? For me, that was basically the 4-hour extreme, because none of these candles here get engulfed until this candle. And obviously we can see that was already mitigated. So for me, this was like the 4-hour POI that made sense. But even when I draw that on, you know, I'm still aware in the back of my mind that price could dip a little bit lower and, you know, mitigate something within here. As long as price didn't breach that low, right, I'd still be happy to continue to look for longs from within there. So price did pull back down there last Friday, but just missed it. But we know that price doesn't have to obviously mitigate that. We've got the pivot here. Like if you can also call that pivot, you take 1 or 2 candles there, it's mitigated that, but also, you know, we're within the price swing range. So anywhere within here is 4-hour demand for that higher low to continue. Cool. So 15-minute, the one where I'm sure we all have the majority of our questions. So let's just line this up. So swing structure, we had that bearish break over here. And then I mapped this as one straight push down, because after this boss, for me, there wasn't a significantly sized swing pullback, you know, relative to recent price action, right? These to me are clear swings, and then that's just one bearish leg to the downside. So then we had some very complex internal structure, which I've tried to break down in the recent lesson, so I'll leave that for that. And then we switch bullish again. Okay, so when we break bullish here, obviously this is in our swing high when we get that decent sized pullback there, whereas our swing low is the lowest point that broke the swing high, right? We would do that box tool after the high was printed. So this becomes the lowest point, right? After this high was printed, that went on to break the high. So let's use our pretty little blue circle to denote our M15 swing low. So let's use some bar replay to around pre-Frankfurt there. Okay, cool. So we got our swing high, we've got our swing low. Down here. Now, like I was saying, we obviously had this 4-hour POI. It would have been nice for price to fall down into here, and we can look for some refined M15 POIs within here to try and catch the swing high low, and then catch the pro 4-hour and pro M15 bullish trend moves, right? After price pulled back on the Friday, we know that it doesn't have to mitigate 4-hour demand. We know it's come below the range EQ, which is a very good sign that price has pulled back to value, right? That increases the probability that a swing high low may have formed. What else did this low do? It swept the liquidity below that structural low there. Okay, so that's another decent sign that we typically look for, like a sweep of liquidity when a strong low forms. It also mitigated this M15 demand zone, right? And it obviously led, we can see, a fair amount of momentum came in there to the upside and started to form a potential demand chain. So coming into London, right, there's pretty high chances that this weak M15 swing high is probably going to break, right? We know that it's the expectation of the swing structure. Both the M15 and 4-hour are aligned. So from a swing structure perspective, it's very simple. It's likely we've had the swing pullback, and now we would wait for this high to break. Once that high breaks, we can then look for price to come into a decent area of supply, and then potentially we can look to play the swing pullback into the next swing range, and then look for our nice discounted high low. Right, that's kind of the classical way, let's say, in which we try to trade. That's the highest probability positions to be looking for when we're trying to catch the extremes of the swing move. So after a break of structure, we come into a decent level of supply. We obviously wait for, all other confirmations. I'm not going to list them all now. And then we can look to play that swing pullback, because although that's counter trend, that's going to give us the highest risk to reward to play counter trend. Likewise, then we come in down towards our new swing low, right, into our demand. And that's where it's going to be highest probability, highest risk to reward to be looking for those pro trend longs, right? That's what we try and teach for the majority of the course. That's what the beginner trade plan is focused on you trying to get to. Obviously, we're still currently working on the beginner trade plan as well to try and make that a little bit more advanced with getting you guys into counter trend stuff. So, but we'll talk about that a bit more on another day. So that's typically what we look for, right? So when you come into Monday morning and price is sitting right near this week high, or even though we expect it to go and longs are pro trend, is this the best area to be getting long, right? We know there's some weak supply over here. It's not well priced, like I keep saying, right? It's right at the premium. This is typically where I would either wait for this to start to fail, right? And then maybe we could, start to trade this, or just be patient and wait for price to come down and then look for the long. Or like I was just saying, just be patient, wait for the boss, let it come into a decent area of supply, and then play the swing pullback, because we know that after the break of structure, it's a lot higher probability that you're going to get that deeper move, okay? Hopefully I've kind of made that clear. But now with sort of our deeper understanding of really digging into the internal price action, we can potentially be a bit more aggressive with our entries, right? Now, the point Tomas as well tried to make very, very clear in the Discord is that although we can have a deeper understanding of price and our expectation of what it may do, how it may get there, all of those things, it doesn't necessarily mean we should be looking to trade it or can trade it. And this is where it would be very easy to get, lost in the sauce. Myself included, it's very, very tempting to want to start, scalping every little internal swing in the market. Now, I'm not saying you can't do that, you shouldn't do that. I'm not saying any of those things. I'm just simply saying, be careful, like take it one step at a time. Remember what the core framework is of what you've learned as you've gone through the course, like the core philosophy, which is what I've just described at the start, trying to catch those M15 and 4-hour swing high lows. And then if you're going to play the counter trend, try and get it after the boss to catch the majority of that move, right? They're the big moves we want to be catching, not so much like this low to this high and then like trying to catch this low to this high, right? Work your way in towards that. And obviously you can eventually get there, but just try not to get lost in the sauce, as I keep saying. So anyway, let's not worry so much about how we could have traded this morning, but let's more just focus on how could we have read price. And I think that's going to be the best way for you guys to really understand and nail these new concepts before then eventually then looking to trade it. So what do I mean by that? I mean, literally map your internal structure and then say to yourself, what we expect to happen at each point. And then that way you'll see your expectations start to, get more and more accurate with it. And then you'll start to, get a better feeling for how POIs are likely to play out. And then you can start to then make those better judgments if you want to trade them or not, if risk reward is on your side, et cetera, et cetera. But anyway, that's a lot of waffling. So that's kind of just getting to mapping it. So if you're ever getting lost and confused with all the little structures, this is what I say in the lessons as well. Delete it all for a minute and just go back to, let's get rid of the 4 hour just to try and keep it a little bit clear. And just go back to your swing structure. So as long as you know you've got your swing high in the right place and your swing low in the right place, right? Then you're doing okay. So now the next thing you want to look at is like what's the most obvious or biggest internal structure. So if we know like this is the last point we're comfortable with, we get that swing high, like where would be the last internal low? Well, for me, that would be that pullback there, right? We've got these movements here, we've got that movement up, we've got that movement down, and that for me is just one big internal leg. Okay, there's nothing really there for me that I'm going to consider internal structure. That's one big push up. So then we know we had a bearish IBOS there, right? So this is why it was a bit tricky coming into London this morning in terms of wanting to aggressively buy these shorts, because even we can see this little swing here, is because actually there was a possibility with this orange line here, this orange range, that was that internal lower low, and this could have been the pullback up into this extreme. Let's call it larger. Let's call this the orange structure, like the larger internal structure. And this is where it can get a bit complex, right? Because then you can expect that could be the next move to come down into that 4 hour pivot demand, right? We can start building that case and logic behind why that could happen, right? We could come into this extreme supply. That's a strong orange internal high. Because we've had the break of that internal low there, right? So this being the structure, draw on like higher high, higher low, higher high. then we come down and form that lower low. We pulled back up to here. So coming into Frankfurt, there's a good case you can make for this larger orange internal structure, but now that lower high may form, we may come down and take out this weak low. And then that would make sense because there's an unmitigated 4-hour POI here, deep in the discount. There's nice M15 POIs within here. And then we could look for the swing high to do that, right? So that's one frame and lens in which you can look at it, the larger orange internal structure, okay? But remember, and this is, the swing is always going to take precedence. So if we know, like we went through first, that we've had that pullback already to the M15 discount, we've had a sweep liquidity, we've had an M15 mitigation, we've had a pretty strong movement away, you have to understand that like there's a pretty decent chance now that swing high low could be in place, and that we could be ready to take out that high. So we've just looked at two types of structure now. We've looked at the main swing structure, which we know is the most important, which literally means let me well label it and really help, right? So weak swing high. I'm only going to talk about pretty much the M15 price action now, okay? So that's a weak swing high, but what is it also at the same time? It's also a strong internal high, right? Maybe let's make it orange. It's going to take a little bit longer to do this markup, but it might help us to really visualize things. So let's make that orange. And then that will be that low there. So hopefully you guys are kind of following this so far, right? So we have the blue big swing structure, and we know that, let's call this IBOS. Let's make it nice and orange and try and keep this consistent. I need to save down some of these templates, so I'll be a bit quicker in the future. Okay, cool. So hopefully you guys are following that, right? We think the swing high low could be in place. We want to target the weak M15 swing high. That's always the first thing and the thing you want to have at the top of your mind always, right? That's like the most high probability or high priority thing you're going to be thinking about. Then we have the larger internal structure, right? Which is this orange leg that we're looking at, which is essentially from this low to this high, down to this low, and then we're here. So we've come into the extremity of this strong internal high, even though we know it could be the weak swing structure. So there's a good potential that this here, make it nice and orange, could be that next move, okay? Hopefully we can all kind of follow that. So what we said as a framework in the lesson is that although this is a strong internal high, and although that lower high could form, and although we could come down, the best way we can get confirmation that this next potential orange leg is going to happen, right, is when we get either a change of character, but a more accurate form in this instance would be if this internal of the internal low was to break. So let's use it. We'll use a solid line for now. So the reason why that is because you can see that larger orange structure, right? But what do we also have within that? All right, we have these swings as well. So let me just change this to green. We use the arrow because it'll be a bit cleaner. All right. I'll make that green. Okay, so hopefully you guys can see that, where we have that green structure is basically the bullish internal trend of the orange pullback. So you have the green trend is the internal trend of the internal trend, and that's why it becomes fractal and it's like Inception. You're going down those layers and layers and layers, and it's essentially multi-time frame analysis, but we're just looking at the M15. So it's all one and the same thing. And this is why if you haven't nailed the, the market structure module in the course, this is going to just be overwhelming, okay? So at this point, let's say we assume, we think there's a good chance that the orange internal high is going to form, and we think that lower high is going to happen, and we want to try and catch this move. Of course, you could look to get in short on the M1 as we come into this M15 supply, right? And you might want to look for an M1 entry model within that supply, right? That's, again, anything I say is not that you can't do this or you shouldn't do this. I'm just trying to explain the possibilities and expectations of what we expect. And then it's down to you to figure out whether that's too aggressive for you or if the risk reward is there. This is purely just about the expectations of what we expect price to do within this framework, if that makes sense. I know there's a bit of a tongue twister and stuff, but yeah, hopefully that makes sense. Makes sense in my head, right? So as we come into this extreme supply, what am I thinking that price could do? Well, at a minimum, I'm just thinking, okay, we're going to have a green, this green. We're going to have a green pullback down into this green high low here, because this is at this point the strong green internal low, because it took out this high here. So all we expect, right, is the green internal trend to do what? To make that higher high, which is done. Now it can have a bit of a pullback into this level, right? This green low shouldn't be breached, and then it can continue up and take out that high, right? But we know that the orange structure is stronger than the green structure, right? So we know at any point this green trend could switch bearish. So once, if that happened, right, if we've got this movement down here and we've broken, well, if you use the same rules as us, it broke and closed below that strong green internal low, that's when you get the confirmation that this is now likely going to be that next strong internal lower high to now get that next move. Okay, so again, I'll go over that. The orange structure shifted bearish. It had this large orange internal pullback to form a potential internal lower high, right, with a large orange structure. And you can start to look to get in entries in here and whatever time frame you want to use, if you wish to do so, to anticipate that move. That's fine. But we only get confirmation that this next orange leg is going to happen once we get the break of this green structure here. Okay, so once that goes, that's then when we can say, okay, this orange low here has failed to do what? It's failed to break that high. The green trend has now switched bearish, right? So now the green trend has aligned itself with the orange trend. And now the expectation is that the green trend will stay bearish until what? Until it takes out this weak orange internal low. And that's basically the framework that I've gone through in the advanced module that we just released. So if any of you are in here now or watching this at a later point and you haven't yet watched that, this will not make sense. So you're better off going watching those lessons first. But for those guys who have and you're trying to get your head around the concepts we're looking at today, this is basically it in a nutshell. Now within that green, right, it depends on how big the range is getting everything. You can get super big expansive ranges. There could have been, even more structure within there. And then you can, map that purple ever, and that's where it can get fractal and fractal. But hopefully, do the majority of you get, before I go any further, are you kind of with me at this point, or do you want me to go over it again? Do you want me to go over it more slowly before we sort of advance into actually playing this bar by bar for London? Either unmute yourself or chuck it in the chat box. Makes sense. Got you. That's good. That's good. Like, don't be afraid if it doesn't make sense. I'm happy to go over it, as many times as we need to. So yeah, Tom keeps asking me if he's right. I don't know if you're right because I didn't watch your little masterclass during London. So you probably are. I don't know. But yeah, essentially, right. Again, we know that overall the swing trend is bullish, and this is always the strongest thing, and we expect this high to get broken. So you have to bear that in mind, right? We have to be very cautious of that, particularly that we pull back to the M15 swing range, right? So there's very, high probability that the swing high low could be in place, and that's the next move. But if we want to take our understanding to a little bit further, and we look at the next larger internal structure, right, we have that orange move, right? So we can look up, we come down, and that's all one leg up. So when we pull back and then the internal structure switches bearish, we know that the internal structure, this larger orange movement, could happen to then pull down to the discount, okay? Now, as we have this bullish leg up, this could just be that orange internal lower high to form, right? Like I say, so we can continue that orange trend. It's getting very, very messy now. And we can look to trade that next orange move. But it's only once the green internal trend within that orange move, because remember the green internal structure switched bullish just to facilitate that pullback, right? The same way, if we got a 4-hour pullback, what's that likely going to be in the M15? It's going to be a bullish trend to facilitate the 4-hour pullback. It's just the exact same way, but because we're in such a large range, we can, we can read this all on one time frame, just on the M15. It has its own, swing trend, it's M15 swing trend, it has an M15 internal trend, and it has an M15 internal of the internal trend, and it could have an M15 of the internal of the internal of the internal, right? It can keep going. But obviously we don't need to drill down too much. So coming into, I'm just going to get rid of some of these lines a little bit. It's kind of helpful to keep them on there, I feel like. So as we're coming into London at this point, again, I'm not talking about trades here of what you have to do. All we're going to think about it through the framework is just like if we were to purely just be analysts and just think, okay, what could price likely do, right? Let's not worry about entries and whether you should wait for an M1 chock or not. We're literally just, you need to understand what the expectation is and what signals we can look for to then confirm those expectations, right? Cool. So we've come into that extreme supply, but from a swing structure perspective, this is weak supply because it's behind a weak high and we'd expect it to get wrong. From an orange internal perspective, this is kind of the last point that needs to hold if that orange lower internal high is going to hold, right, to get that next leg to the downside. So we know that, right? So technically you could jump in and then one shot from within here. But for now, my immediate expectation is I now focus on the green price action within there, right? Because, like, let's say literally this is about to be live price action. All I'd be now expecting is for this to have a pullback anywhere within this green demand range, right? I know this gets a little bit messy, but I feel like leaving the lines on should help for you guys to see it. So that's all I'm expecting at this point, right? For the green trend to continue, all right, and for price to have a little pullback anywhere within, right, this M15 demand range, anywhere within here. Obviously, you can refine it to pivot POIs because we're just looking for what? We're just looking for that high low to continue because this is a protected green internal low because it took out the high. So we're just expecting that green trend to continue, right? The same rules apply as always, right? But if price then comes down and breaks and closes below the protected / strong internal low, whatever terminology you like to use, some people like to use strong, some people like to call it protected, it's the same thing. If we then got that, that is then when this green internal trend has now realigned itself with the orange internal trend, so now both are bearish, right? Which now signals that that orange internal pullback has now finished. The orange internal lower high may now be in place. And now we expect this green internal trend to stay bearish until it takes out this weak orange low because it failed to take out the high, right? And that's the framework in which we're using. So if you want to catch that orange move to the downside, the safest time in which to do that or to have the strongest expectation or to have the strongest signal that that move is about to occur is only once we get the green structure to align with it, okay? It's not a guarantee, it's just a much stronger signal, okay? So until that happens, let's say you want to be aggressive, you could look for longs, right? Within any of the POIs that meet your rules, right? Within that green demand range, whether it be the inside bar, whether it be the extreme, etc., etc. And that's where you can trade against the orange internal trend and be happy to if you wish to do so because it's pro M15. We think the M15 swing high low may be in place. We want to target this high, right? And this is where you could get long. It doesn't mean you have to because it's still aggressive. It's against the orange internal trend. It's against this extreme supply. It's in the extreme M15 premium. It's very, very poorly priced, right? And this is what Tomas was trying to really drive home in the Discord this morning is that we can maybe have a much better understanding of price, but does that mean in which we need to get in that move and trade it? You can't forget our overall philosophy, all the confluences that we use, and etc. So you need to get to that point in which you're happy to either accept that risk or sit in your hands, okay? And it will also depend on loads of things. Is there enough risk to reward for you? Tons of things like that. But again, try not to get too much caught up in entries, but more just about using this structural framework to expect what we expect and not even get too much into supply and demand and order flow, right? So does this still make sense so far? Kind of, before price actually even moved through London, like that's the expectation, right? We know this orange lower high could be going, but until that green low goes, we can just assume like the blind expectation is that this green trend will continue until it doesn't. But if it does go, then we expect the bearish green trend to continue until that low goes, right? So on and so forth. And then obviously if that orange low broke here, right, we'd then potentially come into, let's say, this M15 demand down here, right? And then with the green trend, like this could be like, so let's say you've got the green trend, right? And now what do we expect after an orange IBOS? We would expect an orange pullback, right? Up here. Bear with me whilst I draw this. Get these colors right. So that's what we'd expect, right? At a minimum. So we can either wait for like a little M15 chock within here, right? And that's fine. Or you could wait for a bullish green IBOS and that slightly smaller structure to then play that movement up here. With the expectation that potentially the swing structure high low may now be in place, we could take out that high. But we also know it could just be to have that orange pullback, right, up to this orange internal high to then continue that movement down, right? But we'd only get confirmation of that when what? When the green structure would then switch bearish and then we can look and expect the bearish green trend to hold and we continue lower. Right, so there's kind of three structures here. There's the blue swing structure, which I haven't really drawn on. Then there's a larger orange movements, and then you'd have the green movements within it. And you can see how they can all confirm each other, and it builds from the ground up. What first must happen on the green will then happen on the orange. And then what happens on the orange will dictate what happens on the blue, which is the swing structure. So it's exactly the same way in which we looked in, in the first module with multi-time frame analysis and all that stuff, but we're just applying those exact same concepts to internal structure within the swing highs and swing lows, because especially when you get these big swing ranges, right, i.e. this being the M15 current swing high and swing low, it allows us to be a lot more accurate within that, because obviously there's a lot going on between here and there. Now, for some people, they'll map their swing structure a lot tighter, right? So like they may have like had that as a bullish boss, right? And then that would have been a bullish boss, and then so on and so forth. And that's absolutely fine. You're as long as you're consistent, your swing ranges just might change a bit quicker for you, and then it goes bullish again, right? And that allows you to be a bit more nimble and trade all of that price action. Whereas if you map it, say maybe, let's say more conservatively or the same way I have mapped the swing structure, it's fine. You can still have the same outlook, but you're just using the internal structure to allow you to then trade those bits, or at least understand what's going on with price action. It's all one and the same, really. And that's why I try to explain to people like the PIP rule for measuring swing structure. It's not some magic rule that I just like found out the secret to the market. It's a way to help you be consistent and on trading within a framework. So whether someone uses 20 pips or someone uses 60 pips, you can still almost trade the market in the same way once you have this understanding. And once you really start to nail this internal structure, it will, really kind of not make it irrelevant, but it will make it way less important, and almost whether you type your swing range is tight or conservative, right? Because yeah, I don't know. I think I made my point clear with that. But again, don't worry if any of this is overwhelming. Like I will be most likely adding this particular recording as well to that section in the course, and we'll be going over this tons and tons of times. And hopefully my explanations and understanding of this will only get better with time. It's still relatively, I'm still adjusting to this. So yeah, I don't think there's too much I wanted to add at this point, but that's basically the way the framework would work in a nutshell, and what my expectations of what price may do, not what I'm going to do with it, but what price may do coming into the London session today. Okay. Cool. I'm not seeing any questions come in just yet, so let's go forward kind of through to the price action. So like I was saying, right, simple little forecast for like the immediate next hour would be that price is going to pull down into this green protected strong internal low, right? So many words now, it's a bit of a mouthful, and then we would expect that movement there to then take out the high. But we know if it goes, then we can get that next orange leg to target the weak orange low, right? And that's literally it. Like, it doesn't need to be too much more complicated than that. Obviously, then how you bring it into trading decisions is where it can get a bit tricky. Okay, so now at this point here, we obviously take out the supply zone and we continue up. Now, the next candle, we can see we failed to close above the swing structure. So this is technically a sweep of external range liquidity, right? Because we do not have a swing boss until we get a candle closure above. Now, at this point here, again, that's even more convincing sweep, right? We really are struggling to break, and then we get a movement down here. So now at this point, we have an external range liquidity sweep. We have an M15 change of character, right? Because that was a fractal low, because we had a movement up. The next candle failed to break the prior candle's high, so then we have a pullback, then we have a movement up, and then we have a movement down, right? So you guys should hopefully be, or the majority of you, be quite comfortable with chalk now. Before, we used to refer to that as internal structure, right, in the old lessons, and I appreciate this is where it might get a little bit confusing with the community together as a whole, because now we're just going to refer to that as fractal structure, okay? Nothing about the rules change, it's purely the name, right? Now, instead of calling that an internal low, we're going to basically call that like the fractal low, right? So now we have a bearish chalk. And before, what we used to say, which is almost too simplified, is we would say after a M15 chalk, we would expect an M15 swing pullback. Now we can be a bit more accurate, and we can say once we get an M15 chalk, all we expect is an internal pullback. So in this instance, we've got essentially this, let's say, green structure, all right? That chalk there, to me, I just see that as a signal that we're just getting that pullback into this protected low, right? That's all that chalk means to me at that point. So then if we come into here and then we got a bullish chalk, right? Then I would say, okay, now this hole is this green low is holding, the green pullback is now likely finished, and now we can target the weak green high, right? You see how it's the exact same concept as we've always used. It's just what piece of structure are you applying those expectations to, and what do they mean, right? So that bearish chalk doesn't mean we're going to get that orange move or the blue swing pullback. All that bearish chalk means to me at this stage is we're just going to get a pullback to that protected low. It's only if we've got an IBOS, a break and close below that internal low, that then I expect the orange pullback. So that chalk's the first signal that that could happen, and that the blue swing pullback could happen, but it only confirms this movement. Does that make sense? Hopefully. So it's about chalk means the fractal chalk, right? The fractal break, that gives you your internal pullback, the green internal pullback. The green IBOS then signals the orange movement. The orange pullback is over and the next orange leg is about to go. And yeah, you just build up from there basically. So that's how you can then look, if you wanted to, right, you could look for after the chalk. Let me get rid of some of these lines. After that chalk there, right, you could, essentially look for your little pullback into here to then target into here, right? That would be like a super quick scalp, let's say. Again, we don't want to talk about you have to trade it. It's just that's expectations of how you want to be thinking about it. And then you can look for longs in here to then get that movement. Or you could get in short here, remove your risk as price starts to come in deeper into this demand range, right? And then hold on to some of it in case we do get that boss. And then we'd expect the green bearish trend to continue until that low goes, right? But it's all going to depend on your overall confidence, your understanding of all the time frames, right? What level we've come into, all these things, right? If you want to be that advanced. But that's why I kind of just want to let's just try and keep it to like, what's our expectations of price? So chalk just means an internal pullback into this low. Then, if we get a bullish chalk, we expect that high to go. If we get a bearish IBOS, then we expect the bearish green trend to continue until it takes out that orange low. Because at that point, this whole orange leg has failed to take out that high. So once the bearish green trend realigns itself with the orange bearish trend, that's when we're now ready to take out that low, right? Okay. Hopefully the penny's starting to drop a little bit on that. So let's play price forward a little bit now. The other thing I'll say to this as well about, if you do kind of want to get in short and try and trade that move, this is what we'll get into a lot more in order flow, but you guys should already know this, is this whole area, right, from the high to the low is what? It's a demand range. It's an M15 demand range. Obviously, it's quite large, and that's why we try and refine it to single candle pivots, which is absolutely fine. That's what we want to do for entries. But we always should know and have that understanding that as soon as price is within here, right, at any point, that demand is like, all of this is demand. Everything in between these two green lines is M15 demand. So as price is coming into it, if you're shorting, you're fighting against demand being filled. But obviously, these two refined areas are like where the strongest areas are going to be. And that's why we're trying to get in long too. So you have to be aware of that when you're trying to short into it. Anyway, so price comes down into here, and then it gives a bullish move away. Now, one question I'll probably get actually is, was that not an IBOS? Did that not take the high, and then therefore that takes the low, right? That's where I would say this is a smaller structure. So this is where you could say, okay, that's purple, right? This is where it gets really, really confusing. And this is why I would say try and focus on the larger swings as possible. Because the way I would view that, right, is that's like the green movement up. And then that would be that movement. Make it green. And then if anyone was looking at that break there, I would say that's like a little one here of that. And that would just be to have this pullback into here. And then I'd expect that to break. And then we'd go. All right. And that's the type of structure where now, especially when you think in terms of, like, it's way too small. There's no risk to reward in there. Like that's when you're diving in way too deep. You're almost looking at like M1 structure on the M15. And that's where I would just like not really pay attention to that so much. Like this is probably about as small as you can go, because you're looking at 2-pip stops, you have to figure out like kind of what risk to reward you're going to be getting and things like that, right? So if you're ever kind of confused of whether to not, that's a pullback or not, just jump up a time frame, like, and just look, okay, M30 like cleans it up for me here. Like that's clearly the pullback, right? And then that's the next leg up. Or even look at the 1 hour, whatever can help in those situations, right? Just to kind of help you with those internal swings, clean it up a little bit, just to see the bigger ones. Okay, cool. So we come into this level of demand. So now there's every possibility that the green high low could be forming, right? And now we're ready to take out that green high, right? So then we'd have that movement to continue as we expected, right? And then what happens? It doesn't quite happen. We didn't quite hit that mitigated supply level, but we know we don't have to, and then we push further down, okay? So now we're coming into the green protected low, and we can expect now still that this can go, right? We're coming into, like, this is the M15 demand that would have to hold if that M15 internal trend is going to continue, right? So maybe if you're happy to trade from this area, this is the area in which to do it. But this is where it gets a bit complex and tricky, because what do we have? Well, you see how price came into this demand level here. It reacted, we zoom right in, and it failed to put in a higher high, and then price came down, and what did it do? It closed below the reaction line. So now we have a failed reaction, which means anywhere from the base of that reaction to the top of that reaction is what? That is your demand to supply flip, okay? So it's not ideal that now we have to trade against that. And this is the problem with when you're trying to trade, if you're trying to trade such tight internal structures, a lot of the times there's going to be stuff in your way, right? And that's why risk reward is not your side. That's why it's a lot more aggressive and harder to do. Now, obviously, you could refine that to there, right, to make it a bit more accurate. The reason why I'm saying this is because I know people were looking from the longs from within here, which is not necessarily, I don't want to say bad or wrong, because it's, you know, so relative, aggressive, your plan, blah, 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 blah. But I just want to try and drive home why maybe this is low probability and what you want to wait for. So instead of, okay, let me explain this better. So let's say price comes into the M15 level here, all right, and then you drop down to the M1, and now imagine this green line is the M1, and you get your entry model, you get your choke right, and then you get in long here, okay? That's kind of better in my opinion. That's cool, right, let's say, because you're in now, and now you can target here, right? So if price then was to come up into here, reject that flip, and then continue bearish, and we get the boss, you can remove your risk. But what's happening, or what the people got caught out with this morning, is instead of, because there was no entry, it didn't go in, it gave the chock and went straight up to supply first. And then they were looking at getting in after the supply was mitigated. So now you're trading against the internal order flow of the internal green price action. So essentially you're trading against that purple price action we're looking at, right? I know this can get very, very confusing, but like you're trading against this essentially. Like you want to see that shift, and then once that like shifts, which would be up here, right at this point, now you're in line. Now the purple, this internal of the green is aligned, and now you can say that that green high is going to go. And that's why, you know, when you're trading in such tight little, this is just, yeah, you know, it's not great. But the simpler point was, let's say you want to trade from this green internal low. If your M1 entry model can get in straight away before the supply is mitigated, then that's going to be much better than trying to get in after that supply is mitigated, which will, let's play it forward and it'll make a bit more sense, hopefully. So next candle, right? That's when I think it gave an M1 shock and it pulled up into this supply level. So you've got kind of, you know, a few options if you want to get long. The most ideal one, where we have the most confirmation, is where you wait for that bullish M15 change of character. You wait for this supply zone to fail. But again, because with such a tight range, is risk reward going to be on your side once we break here? Because really all you're targeting is that high. Not forgetting where we already are in the swing structure. So, you know, it's really not ideal to be doing that. But if we get that, then at least we know, you know, from a just purely market structure expectation rather than actually trading it, that's when we're going to have more confirmation that that's now ready to take that high, okay? So if you were looking to get long from an M1 POI down here, right, and you've set your entry order on a nice M1 zone here, but you're not realizing the price is coming to here, now you're trading against that supply, hopefully now you can see why it's low probability. So like I said, you've got two options. One, which is to wait for the M15 shock and then this ideally fail, or two, you wait for this mitigation to play out, so it fills up the supply. Price then, you know, tries to do its job, what supply wants to do, which is take out this low here. And then once that low is taken out, potentially now, right, you can get in on the M1 again. And you try and get in an entry before, you know, that next supply is hit. Not saying you should do this, it's just another way of kind of approaching that, right? Because, you know, this orders would have been filled, that clears out the supply, and now you've hopefully got a bit more, you know, you can see here, it just sweeps that low, and then that supply is basically mitigated, it's gone, so now you should have a bit more of a free path. And actually the chock line, because this low was just taken, right, you see it just wicks it by about a micropip, it's easier to see in the live market. Now where's the bullish chock? Now the bullish chock is on this inside bar, right? So now you've had that fractal structure come down, it's come up, it's come down, and then it's taken that high. So now the fractal structure is aligned with the green structure, right? See how it's so tricky to see, because we're too zoomed in on price, and this is why this is not something you should necessarily trade, but this is, I'm just trying to show you to understand what's going on. So now you've got the demand that caused the shock, price comes into that demand, fills it up, and now because everything's aligned, right, the fractal structure is aligned with the green structure, which is aligned with the swing structure. Now we're ready to take out that green weak high. And then we do that. And obviously, if you're in trades, you want to be taking pretty heavy partials along there, because now we've had the M15 boss. What do we expect after an M15 boss? We expect an M15 pullback, right? Obviously, it doesn't have to happen straight away, but you need to be very, very aware of that. Okay. So let me just bring it to current price action. So yeah, so that's my view of it. Again, my understanding of this can only obviously hopefully improve and get better. But that's the way I view it. It makes a lot of sense to me. I feel like we've got a pretty decent systematic framework nailed down with it. That's, in my opinion, exactly the same way in which we view multi-time frame analysis, but instead of looking at the 4 hour, the M15 and then the M1 or whatever, we're just applying it all on one time frame. And essentially, it's still kind of a multi-time frame analysis, because this green structure is basically going to be like your M5 swings most likely, right? And that orange structure is going to kind of be like, I don't know, maybe your M10 or whatever. We don't need to over confuse it here. But you're viewing it on one time frame. It's just information, right? Like we say, time does no price, price does no time. It's literally just orders going through the market, and we're just trying to build a framework to make sense of it all. I say in the new lessons, like, imagine you were on the M12 time frame and TradingView just broke, and you were stuck with that time frame for the rest of your life. You couldn't change it. You couldn't look at any other time frames. You can trade just as profitably. You just got to zoom out, realize where the larger swings are, probably kind of what time frame they are, and just make sense of the internal structure, and maybe come up with color codes rather than numbers of time frames, right? And then as long as you understand the relationship of what has to happen for each step to happen, then that makes sense. So what do I mean by that? Well, it's like, that if you get the orange eyeballs there, then it's likely that can then facilitate the larger swing pullback, right? And then if we've got the bullish orange eyeballs there, then that gives you the strongest confirmation that the M15 high-low is now in place, and then we expect the orange internal structure to stay bullish until the swing high goes. But in order for all the orange price action to do that, what had to happen? Not what had to happen, but what happened in this instance is that the green structure, right, we had this bullish trend. So if that orange lower high was going to happen and we were going to get the next low, what then would have to happen in this case? We would have to get the bearish green eyeballs, and then we would expect the green structure to stay bearish until it took out at least this orange low, right? And then for this to pull back, it's very likely the green is going to then switch bullish, and then it would switch bearish, take out this low, so on and so forth, right? It's just, the fractal nature of the market. So obviously we can understand that, and that can maybe be simple on its own, but applying it to price action into the live market, looking at all these tiny ranges, and then especially when they start to conflict and they're not all aligned, like, if you're looking for longs, it was against the strong internal high, but it was targeting what we should be targeting, which is a weak swing high. It was also in line with the green trend. So like the green and the swing were aligned, but it was against the orange, right? And the orange sits in between the green, right? Blue would be the strongest, the swing, then the orange, then the green. And that's where it gets tricky. And that's where you have to decide as a trader, are you happy to get in long here against what could be a strong orange high? Are you happy to do that or not? So let me clear this up a little bit. Now, what I would say is, if you are the type of person who might be happy or considering it, this is where I would not get caught up in all this stuff that I went through, which is the bearish chalk within here, trying to get long from this, waiting for the chalk, blah, 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 blah. It's like, know that this is your strong internal low. Understand it's against the orange, but it's pretty likely you're pretty confident the swing high low may be in place. We can see like the momentum's pretty bullish, right? We're looking at the recent order flow. We've then come into this green extreme M15 demand. And maybe now, because whether I enter directly on the M15 or something on the M1, you have to weigh up, because you should really only be targeting, basically that recent high. Is that risk to reward enough for you? They're the types of things you have to weigh up as a trader yourself. But right now, I wouldn't get too caught up in necessarily trying to trade these. And this is why I really try to drive home at the start. Stick to what we've been doing, the main bread and butter strategy, the philosophy, that we try and drill home, which is you were trying to catch, right, these movements here, right, the swing pullbacks, the higher lows, like they're the types of movements we want to be catching, or at least initially focusing on, or getting in near them, and like the initial movements away from them. not so much like trying to bite right into like weak swing highs. But obviously, not saying you shouldn't or can't do that. I'm just saying that's where you should be starting from, and then work your way towards this, or use these frameworks to have a deep understanding of price to help you with that. So let's keep a quick eye on the chat here. Makes sense. It's like the M15 boss confirming a 4-hour pullback. Exactly. Yeah. Giorgio, makes sense. Can you talk to these new lessons? I hear good things. Yeah. Hopefully they're all right. Hopefully they make sense. You guys can get through them. But this will help with strong areas of POI in M15 if you understand how to use it correctly. Yeah. At this very moment, what do you think about looking for shorts, since internal shorts is still aligned despite M15 change of character? Okay, maybe that was a question at the point in the bar replay which I missed. 9:30 a.m. candle. Let's assume it was this candle here. So yeah. At this moment, so let's bring it back on bar replay. Okay, it's a good question. So at this moment, where are we? We have this demand flipped to supply. Oops. Okay, so talk through the logic, right? If you're ever confused, literally say to yourself what's going on, as if you're trying to explain what's going on to like a 5-year-old or your gran or whatever, right? At this point, price came into demand, it failed to put in a high, it broke and closed below, so we know that we have supply here. The fractal structure, right, is still bearish. We haven't had the bullish shock at that point. Actually, we have, okay? So then we came down, and then we took that high, right? Even if we hadn't, like imagine there wasn't a bullish shock, right? And imagine the fractal structure was still bearish and we'd pull back into the supply. Do you want to get short here after the strong green internal higher low has been mitigated from the extreme M15 demand? Considering we've had the M15 swing pullback, looking at like the order flow clearly being bullish, we've come into this level, and now you're wanting to short from here. For me personally, no, that would be nowhere near where I would advise or would want to get short. And this is what I really mean. It can be very easy to almost convince yourself of trades here that could happen when it's just not worth it. Like, I wasn't even bothered really about trying to get in long from here, and I definitely wasn't to get short from here, just because it wasn't that great value. It was conflicting against the orange structure. We had the external range liquidity sweep, right? So there was every possibility that could go. So I wanted a bit more confirmation. And like for me, the better trade would have been waiting for that to break if it was going to happen, and then looking to trade that move down into here, or just being patient and waiting for the swing breaker structure. And then, we can either, then it's much higher probability to play the counter trend pullback, right? Like I was saying at the start. So even if we had an M1 shock within here, of course it could play out. Like this is just a framework again. It's not, this isn't the secret to the market. It's close to it in my opinion. Like I love it. It's helped me loads. But yeah, just think about like, that's why I keep saying like always zoom out and literally keep doing it throughout the session. Like I do it to myself. I keep reminding myself, right, where are we within swing structure? Okay, like that's the bigger movement, right? So I know it's very, very likely that we've had this movement here and we're almost about to break through. Okay, now where's the next bigger movement? We've got the orange structure, right? And I know that likely could be bearish, okay? So, that's not ideal for shorts, but I don't really want to start trading that movement until this low goes. Okay, now let's drill in a bit. I've started to consider trades and go, what's the current kind of significant internal structure that I'm dealing with to give me my most immediate bias? Well, for me, like no matter whether you want to look at it like this way or you want to look at it like this way, right? In this instance, it doesn't massively matter. And this is like where everyone should almost have this in the same place. That was clearly the last, clear internal break. That is one push up. This is the range we are within. We've come into that protected low, right? So in terms of shorts, like the opportunity to do that, if you're going to do it before we get this break, was to do it like here. If we had got that little chalk and then came in before any demand was mitigated, then maybe, right? Because then you can remove your risk as it comes down into here. But yeah, at this point, like that pullback, right? Think about it this way. If you just think about it very, very simple, like I'm saying, focusing on this green, the pullback's now likely finished, right? It's likely done its job. It's come down. We just pulled back to mitigate the demand in the protected low. So now it's very likely that move is going to go. So for shorts, at this point, when demand is mitigated, I'd want to see at least that. And then wait for it to pull back up, right? Because then you have a protected green internal lower high. Now you have a weak green internal lower low to target. And then you can catch that movement there. Especially as the risk reward is on your side to now target all the way down here, right? And then you can do that. So hopefully that makes sense. Cool. Do I have a personal email for PayPal? Send me. I think if you send me a DM, we can deal with our billing issues and stuff at another point. But yeah, we won't do that right now. Cool. So do we have any specific questions about this PA, or about the framework, or about the new concepts in general? Otherwise, we'll probably start to wrap it up because I think we've been going for about an hour. I'll probably upload this to. Ooh. Okay, cheers. Thanks for unmuting yourself for that. But yeah, well, I'll probably upload this to below the lessons that we've done so far in the advanced module, as I think hopefully this will be beneficial. But yeah, like what I would do if you are at the point of trying to implement this and you're comfortable with the other concepts, obviously watch those lessons again and again and again. A task I didn't put in there, but I'd definitely recommend, especially whilst the price action is still here on TradingView, is go through the M15 price action that I went through in the walkthrough. Like do like 1 day's worth of M15 price action, like play it through yourself or do it without bar replay, and then go watch the 10-15 minutes that I spend talking through that. All right, and compare it, and then go do that same bit through bar replay and say to yourself, like, mark it on, use different color codes if you need to, and go, right, like just like this bit here, we've had this green IBOS, what do we now expect? We expect a green pullback to the protected low, a chock, right, that fractal break will just signal that that's going to happen. It's only, and we expect that harder to form, it's only once we get that green IBOS that now this green bullish trend has failed, and now we expect this low to be weak, and now we expect the green bearish trend to continue, that these lower highs should all be protected until we take out this low. And if you just keep saying that and keep doing it, and then you keep seeing how all the interactions play out, then when you get into more complex scenarios where you can have internal with internal with internal, or POIs, or you're not quite sure to trade, that's when eventually you'll get to it. And then forward test it, right, like we have done today, like with your live price action. Don't be thinking you now need to start to trade this to learn it and understand it and implement it. Like instead, just sit back, relax, and just mark it out. Like just the same way I just said, right? And just watch it play out, and your confidence will build a lot quicker. Whereas if you start trying to jump in on trades and everything, like even though the trade might make logical sense, like you haven't quite figured out, does it meet your risk tolerance? How far are you going to target? What confirmations do you want in this scenario? Like, are you happy to take an M1 risk entry within here? Are you happy to take an M1 confirmation entry, or would you want to first see the M15 chock and supply fail and all these things, right? And that's like when it starts to get really advanced, because you need to be able to get to that point if you're going to be aggressive in these areas. And this is why it's so easy, especially if you start to feel confident with reading price action. It's very easy to get confused with I should trade it, because we all have to fight that. At least I have to fight that urge to want to trade every move, especially if you feel like you can call it, because you want to get a return on the time invested of sitting in the charts, getting up early, being disciplined, right? You want to be a trader. We all have that urge, but first it's like earn the right to get to that point, and you might find like maybe you have to be a bit aggressive and get your fingers burnt first, to then kind of do that full circle and come back and go, right, I want to focus, like we keep saying, on those bigger swings, catching those swing higher lows, getting that high risk reward stuff where we know the market's going to give us those stronger moves. And only once we've got the boss and we've come into a good level and we've got our confirmation, then we're going to look for those counter trend movements rather than kind of trying to force it up here. That would be my kind of final advice. I would leave it with, okay, we've got a few more questions coming in. Makes sense logically. I think I will watch after watching the new module. Yeah, if you haven't watched the new lessons just yet, yeah, this fair play if you followed along with this. But yeah, the new lessons will hopefully really make this sink in, but I'll add this in after it, so that should make sense to go back over. The next M15 demand for long is low probability because it's after the swing. Are you talking about the current price action right now? Or which, the next M15 demand, or the next 15 zone for a long is low probability because it's after the swing M15 shock. I'm not entirely sure what you're talking about, Alexander. Yes, this. So the next, I'm assuming, do you mean this zone here? Yes. Okay, so let's just talk about where we are, right? Let's not even worry about the 4-hour chart. We've had an M15 breaker structure. All right, let's get rid of this for a minute. All right, so whenever you get lost confused, make sure you've got your swing structure in the right place. So let's get rid of all this. All right. Okay. M15 boss, I think we can all agree, right? M15 breaker structure. So where's our swing low? Our swing low is the lowest point that took out this high after it was printed from where it broke. So we can drag our tool down, right? If that helps. I know some people sometimes still struggle a little bit with this. So that's your M15 swing low. Cool. So let's get rid of that. And let's drag our line down. So we know what swing range we're working with and then the M15. That's all we're going to concentrate on for now. Okay. What do we expect after an M15 breaker swing structure, right? We expect an M15 swing pullback, right? How far that will pull back, we don't know. We can use extreme demands, we can use premium discount, blah, 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 blah. But that's expectation from a market structure standpoint. Before, what we used to say is M15 chock, right, which would be this level here. That's the nearest fractal low. That would be the first sign that we're getting a swing pullback, right? And that's still true. But the better understanding is that once we get an IBOS, that gives us a much stronger signal, okay? So for me, the IBOS that I would want to see would be this level down here, okay? Because I view that one as one movement up, that as one movement down, right? And then that as one movement up. So that would be where I would be seeing, once we got a candle closure below there, then that would be a lot stronger. We would expect that green trend to then continue, right, until it doesn't. And then once that broke and we got a bullish IBOS, then that would be a much stronger signal. Let me redraw that. So let's say we get the bearish IBOS, we expect the bearish trend to then continue, right, as we come into our demand levels. Now, let's say we get a little M15 shock down here from demand. Yes, great signal to get along, right? That's absolutely fine. But just be aware it could just be a bullish shock, just to come and mitigate that strong internal lower high to continue down. It's only once you get the IBOS, right, the actual break of the internal trend, that now we have a much stronger signal, the M15 high lows in place, and then we can continue up, okay? Just wanted to go over that sort of framework. That's how we're using it. Now, in this instance, it's not always going to be the case, but in this instance, that's, somewhat of a decent low. This is the main structure I'm focusing on personally from an internal structure perspective, but you can still see some sort of structure there. So that is, somewhat of an IBOS, but I would just be expecting that break just to do that, just to come into this internal low, right? And then you could expect that. That's why I'm saying it's only once this low goes and I have a much stronger conviction that we're going to get that deeper pullback. So in terms of buying from here, could you buy from this demand? Yes. Could it play out? Yes. Is it high probability? No. Because after that swing boss, we expect a swing pullback. So this is going to be down to you, your risk tolerance, what you find through your testing, but not just that, it's also the whole bigger picture. Where are we within the 4 hour and a daily? Are we coming into 4 hour daily supply? However extended are we, on those timeframes? Like we're starting to come into, this daily supply range now, right? We've just tapped into it. Like all these things need to come into your thinking and analysis when you want to take it that much further, right? Rather than just focusing on one time frame. And that's why I would say for the bulk of you, once you get that M15 boss, don't get FOMO, let it play out for a little bit and let the pullback come in. The caveat to that is if it's a 4 hour boss, you don't have to be as strict. You can continue to chase a 4 hour boss, right? Because if you're entering the same way I do, like on primarily lower time frame entries, right? Because it can go on for a long, long time. Like although that doesn't look long after the boss here, we expect a 4 hour pullback. Like that moved over 100 pips before we got a sizable pullback, right? So you can chase it a bit more. Whereas the M15, it's only going to go so many pips, and we trade with a 2 pip stop. Therefore, risk to reward is not as high, right? If that makes sense. So in terms of getting long from here, I wouldn't recommend it. Maybe the better trade if you wanted to be aggressive would be just purely talking about the M15 here on its own. I'm not going to do a full time frame analysis. Would be from here. Why? Because that's at least in line with the green trend that we've been looking at, right? So that would be a much better area to be looking for longs than here. Okay, not to say you shouldn't trade from here, not to say you can't, not to say it won't work out. I'm just saying from my perspective how I like to trade. This has a lot more confidence than here, but I would still be cautious of that. And in terms of looking for shorts, right, maybe at a bare minimum, after an M15 boss, you need to see an M15 chock. We'd get an M15 chock, right? And then you look to get short. But this is where your deeper understanding comes in of what's happened. You're now trying to get short after we've had what? We've had the green pullback into demand. Is it high probability to short from here? It's up to you. I would say probably not, right? And that's why then waiting for the green boss, right? That's when it's much higher probability. So rather than just a chock for the short, you may want to see internal structure change. Now, And again, this is why there's so many layers to this. This is where it's tricky. It's a case-by-case basis, because in this instance, where the chop occurs, right, it's right down here near this low, right? Whereas in other scenarios, you could have green structure like this, and then you could get the chop up here. But now you see how this is completely different, because now you have all of this risk to reward down and towards this low, right, where the next demand range is. You have so much on your side. And that's why, yes, we should, and you definitely should have these rules in your plan. Okay, I'm only going to trade a counter M15, like i.e. when I have an M15 chop from wherever. But doesn't mean then when that happens, then you have to take the trade from the supplier that caused the chop. You need to read, is the risk reward there? What's the internal structure doing? Where am I? Does it make sense? Like, what have we mitigated from demand to come back up to my entry where I was looking to get short, right? Because that's what keeps happening. Sometimes people are a little bit too blind, until they get that experience and just go, right, I've had an M15 choke, I've got an M15 supply. As soon as price comes in, I'm going to look for my M1 entry model. Damn, it's not working. It's like, yeah, okay, that's fine and it's good, but you need to be doing the hard work day in, day out on the weekend, reviewing these trades and understanding, why was this set up on paper? It sounds the same as this other setup. They both had the M15 choke, they both had the M1 entry model. And in fact, the one that lost had an amazing M1 entry model, had super clear liquidation, super big V shape. But the one over here was a crap M1 entry model. It was just a little M1 chop, but that one played out. Well, it could be probability, right? We know that as well, but it's much more likely that it's because of the bigger picture. And that will come with time and experience, of course. But yeah, you do need to, put in the work to try and really study that with your trades and understand those subtle differences, right? So it's not that more discretion comes in my opinion, because it's the same mechanical framework. It's more that your understanding of all of the pieces of the puzzle comes in. And that's where you bring your trading to the next level. Is that easy? No. Will it take a lot of time? Yes, of course it can. This is not going to happen overnight. You really need to start thinking about the markets as like a chessboard. Like, I don't play chess, but I'm really tempted to start doing it now, because I've heard that phrase so many times from super experienced traders about playing chess and thinking 6-7 moves ahead. And that will really help with, when we have this framework of internal structure, you can think 4 or 5 moves ahead of, what that would mean for how price would need to get down here and how it would look when price got down there. So therefore I wouldn't be interested anyway, or I would need to see X, Y, Z then happen. I understand that I don't want to scare you guys away, but that's why we put it at the very, very, very end, of the course so far. And you guys should nail that basic pro M15, right? Trading in line from the M15 POIs, and being quite quick with your management, and then bit by bit, layer by layer, get yourself to this point. Cool. Mechanically, are you using a count of 15 pips on the M15 to determine your IBOS level? I am not personally using any pip rules pretty much anymore in total, as you guys have probably noticed. I would, it's still a very, very useful tool. It helps you give you that consistent framework. If you want to keep using it for swing structure, please keep doing it. If you want to use it for your internal structure as well, I've had that question a lot. Of course, you can continue to use that. Do I think it's necessary, especially for internal structure? No, especially when you really get this framework, because and especially with volatility changing, right? That's the main drawback of the pip rule. But what I would say with internal structure is, if you can, for instance, like we had the 2 internal structures, right? We had the larger orange, which you can see, and then we have the larger, so that movement, and then we had the green structure within it. As long as you can see both of those, then it doesn't really matter, like pip rules, in my opinion. And that's, I don't know how else to explain it. That's what I was trying to say at the start about, like, if someone maps their swing structure quite tightly and someone maps it quite loosely, it doesn't really matter, because as long as you can, know where you are within those ranges, it's just, like, yeah. Try and give you a simpler answer. Like, use pip rules if it helps, but I really feel like it's unnecessary. And I think, I think the majority of you will be able to do this and just draw on a structure that makes sense. And then if you see a smaller structure within that and you're not sure if that's significant enough to be your internal structure, that's fine. Just view it as the internal structure of your internal structure. And that's the whole point of this, right? And that's why you don't need those pip rules, or where pip rules might throw you off even more. And like I said as well, use like this pullback here. Let's say you're happy with that one, and you know that that's a green IBOS, but then you're not sure about this one. You're not sure if that's just to do this, or you're not sure if that's to switch bearish and then do that, right? That's where you can jump up a time frame and go on like the 30-minute, and you go, oh, actually, yeah, it's clear, right? That's one movement, and that's a down movement, and that will be what will help. So I would say, if you're ever not sure, always just try and focus on the larger movements, because they're going to hold more weight than the little movement. Yeah. Are you still working on backtest video? Would be nice if you have a backtest video on this new knowledge. Yeah, I mean, have you watched the course module yet? I do like a 2-hour walkthrough of this. I know I haven't done like with trade entries and stuff. Maybe that's what you're asking. Yeah, I don't know what stage you're at, CZ. There's a 2-hour walkthrough of literally just nailing M15, because if you don't get that first, then there's literally no point in looking at entries. Entries are basically always the same. What the difference is whether that POI on the M15 was the correct one you should have traded from, or not that it's the correct one you should have traded from. It's how far should you have managed to trade, or not even that. It's is there enough risk to rewards to trade from this M15 POI, or how much confirmation do I need in this one? Right, and all those variables are you're only going to know those answers once you're very, very comfortable with what your expectations are on the M15. So that's why nail that first. So in terms of content, what we have planned, the next step is what is basically the same concept, but we put it under the bracket of order flow, and that's basically where we draw on the supply and demand ranges of this. So some of you have probably seen, you can kind of see it and guess it. You've seen probably Tomas draw a bit of it in his work, but for instance, this would be the green demand ranges, right? That is the structure we're then working with. And then once that next range breaks, right, that's the next demand range we're working with, right? And price will continue to mitigate those green ranges until what? Until what? It breaks, and then we get that switch, and then it will continue to respect the supply ranges. It will continue to respect those internal bearish trends, right? And that's essentially what we're going to get into. But it can get a bit more complex again, and there's ranges within ranges and fractal zones within zones, and you've got your POIs to throw in, and we don't want to necessarily confuse you. So we'll probably, let's see how we get on with this more advanced structure for a bit. Let's let that sink in, and let's really nail that down and get that that mechanical framework as clear as possible before we kind of maybe bring in that next level, because it's going to be a bit of a mess otherwise. So that was the original plan, to do that bit of content next. I've done a lot of work on it already, but what I might do instead is just quickly go back to the M15 beginner trade plan, or the beginner trade plan content in general. I want to figure out a bit more succinct rules about how you guys can get into counter trend trades, maybe get a bit more active with that, and do a sort of walkthrough, or at least trade examples of that. Because I think that will help a bigger bulk of the community for now, to get you on that path, rather than trying to get everyone FOMOing into this more advanced stuff. I think there's a nice pillar and bridge that needs to happen for, I would say, 80 to 90% of the community before really trying to nail this aspect first. So thinking out loud, brain dumping you guys, I'm probably going to hold pause and order flow stuff for a bit. But to be honest with you, you've got what you've got now is all you need for that anyway, pretty much. And I'm probably going to go back to the M15 stuff. I am going to a stag do from Thursday till Monday. So I'm going to be away from the community over that time. So I can't promise I'm probably going to get any content out before then on that. But I'll try and crack on with that heavily once I'm back. But I hope you guys are enjoying that. Just looking through the comments. So I'll wrap that up there. I'll upload this. Hopefully it's recorded properly. I did say it was recording at the start, so hopefully, fingers crossed, it has recorded. I'll upload this to the end of that little section of new lessons. Like always, I don't want to sound like a boring teacher, but just go over the content literally each lesson over and over and over again. Make your own rules, draw your own annotations, draw your own framework to add into your plans. Just drill it in. You'll think you've got it, and then just keep doing it. Practice each day's worth of M15 price action on the 2 weeks that I go through in those videos. I think I start in the walkthrough. When you guys get to it, you'll see what I mean. I think I start down here, around middle of May. Just take that first day that I do. I think I do it from here. So the 12th of May, it's the 14th of May. Just take that section of price action. Don't watch what I do. Just draw it on yourself without with hindsight. Map it all on. Annotate. Okay, at this point we've got a shock from extreme supply. What do we expect? We expect the pullback. It could be to take out the low, but actually until we take out the IBOS, that's only once we get it. Now we expect the bearish trend to continue, and then we take out that low. Only once that goes, then this high is weak, and then we can expect that to continue, blah, 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 right? I'll go into a lot more detail in there, but I would look at this price action first, you do it, then watch what I say, and it will sink in so much more. Trust me, it's so easy to watch content and you get it and you do understand it. Your brain gets it. Like, you understand the logic. And then you go into the market and you're under pressure, candles are moving, your brain just melts. And that goes to me as well. Like, I'm still trying to get very, very, very used to it. Although I feel like I have a good understanding of it, you know, adjusting the way I've been trading for a number of years now into this, it still takes a bit of adjusting, right? You're not just going to suddenly click your fingers and get it. So practice. I start to think about how you want to incorporate it into what makes sense to you, how you like to trade, how aggressive you like to be, and things like that, and take it piece by piece and slowly, and you'll get there. And if it's too much, that's fine. Go back, start to really nail the M50, the beginner trading plan, and think about how to slowly make that a little bit more advanced if you find it too conservative, like how you could start to bring in counter trend things, how you could start to maybe, you know, yeah, we'll talk about that anyway. We'll leave it there because going for over an hour and 15 minutes now. But I think that's the end of the questions. I don't know if David or Tomas want to jump in and say anything. I don't know if they have any thoughts or thought I did a shit explanation of that. I got anything wrong? But if not,
I agree with everything you said.
Yeah.
Right, so.
Awesome, cheers, Tomas. Yeah, Tomas is he's helped me a lot with this, helped me and David, and yeah, the three of us have kind of been bouncing ideas around with this, and yeah, it's been good. So it's good to get this out to you guys, and hopefully we can all kind of take our trading to that next level with this. But yeah, don't expect this to happen overnight. Like, remember the first time you either started to trade this style, this way, or you joined Photon, right? And, you know how overwhelming it was at the start. It will come with time. So yeah. Yeah. So okay, cool. We'll leave it there. I'll upload it, and then let's. Oh shit! It's only 1 o'clock. I didn't even realize it was that late. So we've missed New York. So sorry if I distracted anyone who trades New York. Yeah, let's see how we go. Okay, cool guys. Have a good one, and I'll see you next one. Cheers, guys.